Hi, my name is Rebecca Jackson, and I'm your host for the Chance Homeownership Preservation Show, where we provide you with useful information about buying, owning, and maintaining a home. Our guest today on our show is Wells Fargo's Molly Pukin, AVP Community Relations and Outreach Manager, who will talk about home preservation, and Pat Curran, Area Sales Manager for Wells Fargo, who will talk about the home buying process. So, Molly, I have a few questions I'd like to ask you about the home buying, home preservation. Can you tell us what is the difference between a lender, servicer, and investor?
Absolutely, and this is something that can be a little bit hard to understand. Oftentimes we use those three words interchangeably, but they're very different roles in the process. A lender is someone that you go to get your mortgage in the first place. So when you're looking at buying a home, you go and you talk to somebody at a bank or you talk to somebody at a mortgage company, and they're the ones that are going to walk you through the different options for what mortgage products are available to you. The servicer comes into play after the mortgage is closed. So now you're in the house, now you're starting to make your payments. Those all go to the servicer. And sometimes they're the same as the lender, but sometimes it's a different organization or a different company. And the way that you know who your servicer is that they're the ones that are sending you the bill each month. Okay. The servicer plays a couple of roles. They help you with the routine maintenance of your mortgage account, kind of like an auto mechanic would with the maintenance of your car. They're going to collect the payments for you. If you are paying your taxes, your homeowner taxes and your insurance with your mortgage payment, then they're going to make sure that that gets to the proper taxing authority and to the insurance company for you. And then the servicer also helps you if you are transitioning, if you want to refinance your home and you need to pay off your mortgage, or if you've come to the end of the loan term, or if you want to sell your home and buy a new home, then they'll help you with that process as well. And for about 95% of our customers at Wells Fargo, that's the extent of the relationship that they have with the servicer. The investor is someone that generally is behind the scenes. It could be, again, the same entity as your servicer or your lender, but it could also be another entity altogether. And in fact, the majority of our portfolio at Wells Fargo that we service, so we're sending the monthly payment requests out and that sort of thing for our homeowners, those are we have other investors on those loans. And so they're the ones that number one, created the guidelines around the loan in the first place. If you've got a certain percentage of down payment that you had to bring to the closing table, or if you wanted to do a 15-year or 30-year term, those kinds of things are what the investor guidelines are for. The investor also comes into play around the guidelines for if you get into trouble with your mortgage, what the servicer or the sort of mortgage mechanic of the loan can do to help get you back on track with paying that mortgage. Because
we do have a lot of homeowners that don't understand the investor part of that.
Yeah.
So I'm glad you kind of explained that to us. Okay. Now, what happens when a homeowner cannot pay their mortgage?
Well, that's a really good question, and there are a lot of reasons for that happening, and I'm going to just walk through those a little bit first. About 4.5% or 5% of customers at Wells Fargo at some point experience a hardship that makes it so that they can't make their mortgage payment. People experience hardships all the time. If you have a mortgage that's a 15 or 30-year term, something's going to change. You're going to have kids that go off to college. There may be a divorce in the family, or there may be a death. There also may be a change in your job. You may get paid more, you may get paid the same amount, or you may get paid less. Sometimes we refer to that sometimes as underemployment. So these changes, if they do affect the ability to repay, then your servicer will help you with that. If you do find yourself in a situation where you're not able to maintain your mortgage payment, the first thing is that's important is to not panic. The foreclosure process can be several months in length. It's an action that the that the servicer will do on behalf of the investor. However, it's also a process, and there are a lot of things that we do to try to avoid foreclosure. It's one of the last options that we seek, because we really do want to help homeowners either stay in the home or transition into the next period.
And you mentioned the length of time. Can you expand a little on that? Because some people feel that if they fall behind on their mortgage, that they're going to lose it within that next month. So that is not the case.
That's
correct?
not the case, no. Oftentimes it's several months, and that really depends, first of all, on the homeowner's individual situation, but then also a lot of states have guidelines around that. Yes. So it really depends on where you're located and what your circumstance is. So the first thing is to not panic. The second thing is to contact your lender. If you've contacted your lender and you still feel like you need a little bit of help understanding the process for getting back on track, contact a housing counseling agency. I know Chance Home Preservation does great work around helping homeowners really understand that loss mitigation process. And oftentimes housing counselors, they go through a rigorous approval process. HUD, which is the Department of Housing and Urban Development for the federal government, they have an approval process where they approve nonprofits. NeighborWorks is a large nonprofit organization that also approve nonprofits. So there's a lot of training that housing counselors have gone through to help with the process. In addition, at Wells Fargo, we've got special connections with housing counseling agencies where we make sure that the homeowner that's working with that housing counselor, that file, when we're reviewing it, is going through the loss mitigation process and isn't getting hung up on any, document requests and things like that. We're going to make sure that we're clearly articulating what we need in order to complete our review.
And of course, all of this is free.
Yes, there should never be a cost for foreclosure prevention counseling with a housing counseling agency.
Okay, great, thank you. Okay, what are some examples of possible solutions that a homeowner might explore if they're struggling to pay their mortgage? Could you kind of elaborate on that? Okay.
Yeah, absolutely. And again, you're going to hear me say this time and time again today, but it really does depend on the homeowner's individual financial situation, as well as the loan that they have and the investor guidelines that are coming down around that loan. In back to where the homeowner is financially, we've got homeowners that are seeking assistance that don't have a hardship yet, maybe are working through their savings to try to pay their mortgage and that kind of thing, but it's imminent. That means that it's probably going to happen at some point. For those customers who are slightly behind or are not behind yet and feel like they can get caught up pretty easily, we've got a couple of options.
Can you explain some of those?
Yeah, absolutely. Yes, okay. You can go back to your lender that you got your original mortgage from, or another lender if you'd like, and you can look at an option called refinance. And refinancing is just reworking the terms of your loan so that they fit your needs today.
Now, I have a question on that.
Yeah.
Is refinancing, do you have to have good credit in order to refinance? Because a lot of homeowners are concerned about that.
It really depends. Yep. Okay. And so a lot of times, and Patrick can actually talk about that a little bit later in the program. But if you aren't behind on your mortgage payments yet, or maybe you've missed one and you want to explore that option, definitely go talk to a lender about your options, and they'll talk to you about the credit, overlays and the credit requirements that go into that.
Okay, great, thank you.
Yep. And then another thing, if you're just a couple of months behind on your mortgage and you feel like you can repay it, then you can also enter into a repayment plan where your mortgage payment actually increases until you're able to pay the backed amount that's due.
So now when you talk about repaying a repayment plan, what is a forbearance, and is that part of that too as well?
So a forbearance is one of the loss mitigation options that we have that's around you're not going to be able to maintain the payment or pay it back very quickly. So that's a separate thing.
Okay.
If you are more than a couple of months behind, or you don't feel like you can have an increased mortgage payment to cover the backed amount, then we can look at some options that really rework what your mortgage looks like. So that's going to renegotiate that, contract a little bit. So
that comes to the next questions. What goes into determining what options a homeowner homeowner may be eligible for, and how can their loan change, and how is that determined?
Yeah, so we have loan modification programs. A lot of those, again, depend on the investor. So you're going to want to contact a housing counselor or your lender to figure out what is fits your unique circumstance. There's a partial claim, which is something that HUD does, where they will pay the backed piece of your mortgage to get you up to speed, and then that amount will go as a loan that you owe to them. There's also a forbearance option that's around the similar things, where part of that principal gets stuck on the end so that we can decrease your mortgage payment. And then sometimes states have, or communities have their own programs. In Pennsylvania, there's the Homeowners Emergency Mortgage Assistance Program, or HEMAP. Other states have similar things that, you know, may be available to the homeowner to help get them back on track with the mortgage. When we're looking at the different options that are available for a homeowner, the thing we're trying to reach is affordability. We want to find an affordable option for the homeowner. So a lot of things go into that. Again, investor guidelines, they talk about what we can do to adjust that mortgage. And there's three main areas where we're going to adjust the mortgage. Number one, it's the mortgage rate. That's the interest rate that you pay.
That's what we guess.
The second one is the term of the loan. So oftentimes, if you have just a traditional fixed loan, it's going to be a 15-year fixed, where you pay over 15 years, or 30-year. Sometimes you can extend that term out so that you can decrease the mortgage payment every month. And then the third piece, which is less common, but we do it, is principal. And that's where the forbearance piece comes in, that's where the partial claim piece comes in, and that's where sometimes there is a bit of principal forgiveness to try to get the homeowner down to an affordable payment on a monthly basis. But
they still owe that. They still owe that at the end, or that's put on the end of the mortgage, or?
Depends on how it's worked out. And again, that goes back to the investor guidelines, and it's unique for each customer. Great.
Molly, let me ask you, are there additional consideration for service members facing mortgage payment challenges? Can you elaborate a little on that?
Sure. I'm glad you asked that question. At Wells Fargo, we really care about service members. They've got a tremendous amount of things on their plate when they're on active duty. Congress agrees. They passed legislation allowing service members some reprieve from some of the financial obligations that they have while they're on active duty. Those expand beyond the mortgage world. It's not just focused on their first mortgage, and it is designed to help them focus on their duties abroad, as well as helping their families have a peace of mind while they're dealing with their loved one being away. So the SCRA, Service Members Civil Relief Act, there's several components to it. The first one is that interest rates on most financial obligations are capped at 6%. So that means that your interest rate can't go over that 6%. And that happens on an annual basis while you're in active duty. Sometimes at Wells Fargo, if we've got a service member that has a Wells Fargo loan where Wells Fargo is the servicer as well as the investor, we're able to reduce that further to 4%. So that's a really great thing. The other thing is that one of the other benefits is that service members are they have a bit of a reprieve from obligations for civil lawsuits that are going on, or other reasons that they may be running to court for various things. They have the right to appear in person, and so the judge can make that happen.
Now, does that also pertain to non-active members as well?
So the Service Member Civil Relief Act is specific to active duty service members, yes. But when it comes to those that have come back home, maybe reservists that aren't currently on active duty, or veterans, there are still available options, but those are in line with what civilians have available too. So again, it goes back to the investor guidelines and the individual circumstance.
Okay, I want to thank you, Molly, for coming here today to share this information with us, and we appreciate your insight and input, and we hope that it helps the viewers to move along with saving their homes.
Yeah, thanks so much for the invitation. We really appreciate it.
I appreciate it. Thank you. Hi, welcome back. I'm Rebecca Jackson, host of the Chance Homeownership Preservation Show. And today we're going to continue with Patrick Curran, Area Sales Manager for Wells Fargo. Hi.
Thanks for having me.
Okay, thank you, Patrick. Pat, is now a good time to consider buying a home, and can you tell us why?
Absolutely. So now is still a very good time to buy a home. We see a lot of great programs out there for home buyers looking to buy a home, as well as rates have continued to stay down. So those couple factors together with housing affordability being very affordable for the average family makes right now a great time to buy a home, especially in York County. We just saw some numbers come out. We've seen home sales up about 13% in August from the previous August. So we're starting to see some improvements, and we still have a good inventory of houses out on the market. So great time to buy a home right now.
Okay. And can you tell us some of the basic information about the home or the mortgage process that people should know if they've never purchased a home before?
Absolutely. So buying a home has a lot of parts to it, and I would always encourage home buyers to be educated about that. So first off, the one thing that I would always tell them to do is talk to your local Wells Fargo home mortgage consultant. We can do things like first-time home buyer seminars to educate them. And we can talk about the basic parts of owning a home so that someone's ready when they really want to do it.
Yes.
And knowing the factors that go into purchasing a home so that borrower can be ready. And those pertain to knowing your credit score,
Yes.
Knowing what credit requirements there are for buying a home, knowing your asset situation and what down payment might be needed, knowing about your income and what we have to show as far as documentation, and also the different types of products. There's many different types of products out there to fit many different people, and knowing the differences between things like a fixed rate or an adjustable rate and how those could benefit each customer. So I would definitely say, find a local mortgage consultant from Wells Fargo. They can help you with those types of questions and kind of walk you through the process before you need to buy.
Yes. Okay, thank you. Okay, can you tell us some of the misconceptions people have about buying a home? Because I know there's a lot out there,
Absolutely.
Can you help clear that up?
Yeah, one major misconception that we hear a lot is, I need to have 20% down to buy a home. And that is definitely not the case. There's plenty of programs out there suited for first-time home buyers with little to no money down. Veterans are able to get VA financing, which can offer 0% down. When we talk about York County has some more rural areas, might be eligible for USDA financing that also offers no down payment. So the 20% is one of the major misconceptions. Another thing that we found in a recent study is a lot of people have a major misconception about credit scores. Yes, you do need to have good credit, but we polled a group of people, and they thought that 780 was the score that they needed to have. 780 is great credit, obviously.
Yes.
We have different programs that can go lower than that too. So I don't want that to keep anybody from asking if they're able to buy a home. And again, I think that's a great reason to talk to someone locally as a mortgage consultant to help you out with those type of questions.
So they don't need a 780 score.
Right. That would be nice. That obviously every loan has its own credit profile and is different, but we do have some more flexibility for people maybe with a little bit lower credit score than that.
Great. Okay. Can you tell us what some of the financing options are for someone looking to purchase a home with a limited budget?
Absolutely. So that's a great question. And when we talk about a limited budget, a lot of times first-time home buyers don't understand what they can do to buy a home.
Yes.
And we have seen some programs that have maybe some flexibility as far as down payment options or more flexible options for financing. So those type of programs might include like an FHA loan, fair housing, which is geared towards getting people into a home with low down payment and having a little bit more flexibility as far as monthly debt load for people. Other programs might be USDA or PHFA, the Pennsylvania Housing Finance Authority, to help people who might have a limited budget get into that first home and achieve the American dream. Because one thing that Wells Fargo recently found is a great percentage of Americans, over 2/3 of all Americans, view owning a home as a real accomplishment and still as the American dream. So we've seen that otherwise some places, but the dream's still alive, and knowing your options is a great thing to do.
Okay, great. Okay, can you tell us how a person, a first-time home buyer, I guess that's what we usually say, first-time home buyer, could prepare for the home buying process? Okay.
Absolutely. So there's a couple different ways that they can prepare. Again, going back to, it's always great to contact your local mortgage consultant, and you can stop by any of our locations, bank locations, or our mortgage locations to talk to somebody. Okay. So that would be the first step. Step number 2 would be, I'd always recommend people to attend a first-time home buyer seminar. Yes. If you've never owned a home before, it can seem like a lot of things, but by attending a first-time homebuyer seminar, it can maybe put you a little bit more at ease and inform you of the entire process. Yes. Another great tool that Wells Fargo has online is an interactive tool called My First Home that first-time homebuyers can go on and take a look at the kind of different nuances that go into buying their first home. So those are kind of my recommendations, is before you decide that you're buying a home, you want to give yourself some time to become educated. And those are a couple ways to do that.
So the first-time homebuyer program, would that lead them to a mortgage person or an off-the-loan officer?
Yeah, so a lot of times what we'll do is our mortgage, we call them home mortgage consultants, might offer free first-time homebuyer seminars. Okay. I know we do them for different charities and different businesses and things of that nature. And a lot of times that person who does the seminar for you might be a good person to talk to because they're in your local market.
Okay. Pat, if a person is not ready credit-wise to buy a home now, how can they work on that?
Yeah, that's a great question. And I think kind of going back to our common misconceptions, a lot of people think, hey, if I don't have great credit, I'm never going to be able to buy a home. And that's one thing that we want to educate people to be able to purchase a home. And one of the things that Wells Fargo offers is called My Home Roadmap, in which we offer our customers, our home buyers, up to 2 free hours of credit counseling with a credit counselor, as well as a series of emails to help them get on the right track to be able to purchase a home. So maybe if you can't buy a home right now, it might be something that if you follow the instructions of that credit counselor and the emails that you receive, 2 years down the road, you will be able to achieve the American dream.
And we do like to let all of our clients know that they need to start now.
Exactly. Yeah, it's you don't want to put something like that off because it's just going to be 1 year later until you do buy your home.
Okay, great, thank you. And another question is, how can consumers be savvy throughout the mortgage process to find the best option for them and to help the process go smoothly?
Yeah, that's a great question, and something that we get a lot, and we've really seen a lot of changes. So not only for first-time home buyers, but people who are maybe haven't bought a home in a couple years, the process has definitely changed. And one thing we found is our consumers want to see transparency. And again, there's been some regulation changes as well as process changes. But one thing that we've done for our savvy kind of borrowers that want to be up to date and want that transparency is Wells Fargo's created something called Your Loan Tracker. And Your Loan Tracker is a great tool when it comes to making sure that our customers are seeing everything that they put into our loan. So it allows them to track the entire process of their loan. They're able to view where they are in the process. They're able to upload documents. So when their processor or mortgage consultant asks them for documents, they're able to upload those. So it really has answered the call that many consumers want to see for more transparency, because it allows them to see their progress throughout the loan.
Okay. I'd like to thank our guests, Molly Pukin and Patrick Curran from Wells Fargo, for coming here today to share information about the home preservation and the home buying process. And thank you to our viewers for watching today, the Chance Homeownership Preservation Program. If you'd like more information, you can reach us at 800-935-3154, and that's 800-935-3154. Thank you, and we'll see you again. I'm Rebecca Jackson.